afternoon, everybody. Welcome to TraderMerlin Show. It is your Thursday afternoon edition show, getting near the tail end of the week. And as Skilled Stocksman said, the beginning of the end. Yes, this is the beginning of the end of this show. I'm totally kidding. As you guys know, in the coming months, at least at the tail end of this year, I'm actually going to be doing a bunch of teaching for Online Trading Academy, and those are going to be all-day classes, which means there will be a couple of weeks where I will not be available to do this show. Now, maybe we'll see how things go. Maybe I'll just push the show time to, a little bit later on. We'll see how my day goes, but most likely I'm going to be pretty exhausted from teaching on my feet for 8 hours, 7 hours. The classes are going to be in Irvine. There's a potential for me to teach in New York as well, so it should be kind of fun. And then you guys know next week I will be in the land of Ireman. I'd be in Jamaica, sit that door, the bumble clock, you saw it now. I don't know what I was just saying. Anyway, I'll be in Jamaica starting on Wednesday, so I'm going to do a show I will do a show on Tuesday, I'll do a show on Wednesday, and then I'm going to be gone for a week. I know, withdrawals, what are you going to do? Oh, anyway, just wanted to share that information with you. And of course, no show on Monday because it's a holiday and I'm not doing a show. Anyway, let's go into the topic du jour, which was the week finish to August. Now, fortunately, we'll see how it goes, but I opened up some short positions today. I actually went directional. Normally, as you guys know, I love selling puts and calls against my positions. This time, I just felt like the markets are about to roll over. I think Skilled Stocksman's onto something here, which says we could use a nice correction. Therefore, I'll tell you what I bought. I went short on the IWM and the S&P today. I bought the 175 expirations for November 17th at $1.82. So we'll see how that one pans out. I'm not keeping that to expiration. My goal is to have that out of my portfolio by October 17th, but I do think September and October are going to be weaker months, so we'll see if that pans out. That was the first trade, and I have, how many of those? I had 40 IWMs. I only have 20 of the S&Ps, but I have the 430 strikes, also November 17th, and those were purchased for $419. So all in all, off to a good day to start the way this market's rolled over near the end. So let's start with the week finish to August. I want to run through some of the numbers here. We'll start from the bottom and work our way to the top of the month of July. For, I think it might be the second or maybe even the third month in a row, Bitcoin is your worst performer, down 10.53%. Now, I'm going to show you the monthly to start, but then we'll jump over to the daily because it's interesting what's happened. There is your monthly, right? And I typically don't look at monthlies, but I like looking at them at the end of the month, right? At the end of the month, I always run through all my markets and the things I look at for the broader picture and to see if those candles are telling me anything. And this one doesn't really tell me much other than it's been pretty much 5 months in a row where Bitcoin has been going sideways, although it ended rather weakly at the end of this month. So let's just look at the daily here real quick. You notice we had that giant pop up because of the lawsuit between Grayscale and the SEC. Everyone feeling pretty optimistic, going, yeah, baby, here we go. And all of a sudden, in 2 days, we gave back every single penny of that gain. That's really not a very positive sign out there. You would have assumed that this would have had a little more follow-through and slowed maybe a little bit, but kept on moving to the upside. Didn't go. Nope, did not go there at all. Gave back all of it in the last two trading sessions, down 4.16% today alone, making it your worst performer on the daily time frame. So let me move up our ladder here of pain and go to something that might be month of July. Who's building these slides? I gotta fire this guy who's writing my slides out here. It's August, not July. All right. So I got that going, and nobody caught that one, so I feel good. And there's no whiskey involved today. Russell 2000 down 5.10%. Now, this is part of the reason I was looking at the Russell from a bearish perspective today. Here is your daily of it. You can notice that today you have a shooting star formation on the Russell. Now, it's not in an area of supply, so I'm not really that excited about it. But I do look at this as you've had 4 giant days up in a row, looking pretty weak. Looking very strong. And when I saw it kind of form this shooting star today, I decided, okay, this is the point where I'm going to start to go short. It's the end of the month. Yes, you might get some window dressing and funds pump on Monday or Tuesday, but I do think you'll see more downside move here going a little bit more in the future. That's right. Damn it, TJ. I'm going to blame TJ. No, Pepe, I'm doing a show tomorrow. I'll do a show tomorrow, yep. Unless you don't want me to. If you don't want me to, I'll just take a long weekend. But yes, I'll do a show tomorrow. Take a look at the monthly here. Can somebody tell me well, this isn't really the best example. So you have this bizarre candlestick formation. You don't see these too often. Notice the formations of the candle for the last 2 months. They're identical, like almost the exact same numbers of open, high, low, and close. The only difference is where they open and close, but the tails are the same on the top and bottom. I find it kind of fascinating the way that these two look. Essentially, everything that was gained in the month of July was given back to the exact penny for the month of August. Rather bearish sign. Now, this isn't any real ugly pattern. I think this might actually be called a tweezer top. Not sure on that one. I don't go too deep into the weeds with regards to candlestick formations, but I think that might be a tweezer top, which is a very bearish position. And there we go. Worst month for the triple Qs NASDAQ in 2023. Yeah, we'll get to the NASDAQ here in just a second because it's coming up on our list. Russell 2000 was, again, number 7 on our list. Moving up, we've got the S&P 500. Now, a pretty big jump here from the Russell, which is on 5.10%, to the S&P, which is only down 1.63 for the month. So let's go over there. And for that, guys, I'm using the SPY just to get rid of some of those tails. Now, you guys tell me what candlestick formation formed for the month of August on this monthly S&P. What do you call that candlestick formation? What does it mean to you? So I'll walk you through an explanation here a little bit as to what the markets have done and kind of the trend that we've been on. For the 8 months we've had markets going on this in 2023, you had January up, March down, not much, but March was down. You had April, May, June, July, and August all up. Hold on. January up, February down, March, April, May, June, July. There you go. And then August down. So we've had 2 out of 8 months down. And it's actually not, as you guys, I love it. You say, what do you guys have? Mike called that an Adam and Eve kind of. Ooh, Mario Hammer. Pepe is the first one to get it correct. If I could give you a prize, Pepe, I would. It's a hammer formation, yes, but a hammer formation is the bottom of a downtrend. A hanging man is identical in look and appearance to a hammer. However, it's at the top of an uptrend. And Steve Nissen, who's the king of candlesticks, I'm looking forward to going to visit the Dojima rice market in Osaka, Japan in a couple of months. That's the origin of really rice trading all through Japan. It's where Japanese candlesticks were created and built out and used, where a guy named Mane Hisahama was the top trader on that open outdoor market for rice. Anyway, long-winded story. Steve Nissen, in all of his educations and teachings on this stuff, says that a hanging man formation like this is a bearish pattern. So for anybody who's looking at the monthly on the S&P, bearish sign. Now, I have to say, I differ on that opinion. Now, we can all formulate our opinions about what these things mean. But if I look at this candle, what it tells me is that for the month, it opened, let me click on that candle. For the month, it opened at a high of, opened at $456. I'll cut off the change here. Call it opened at $456. At some point, hit a low price all the way down here of right around $433. So this was a giant red candle at some point. All over the past week, we've seen this thing rally aggressively. And while it did make its slight new high, it ultimately closed lower. Right today, closing on that SPY at 450. So while it does indicate bearishness because it's hesitated after this really long run, it still had an up move, meaning the momentum, in my opinion, is still to the upside. So I look at this from my perspective and my experience as a bullish indicator, but Steve Nissen sees it as a bearish sign. And that's on the monthly. This is the Bob Dunn chart, right? The big time frame. Now, if I look at this on the daily time frame, I got a different picture. And this is the primary reason why I decided to open shorts on the Russell and the NASDAQ, Russell and S&P today, is because you'll notice that we had hesitation yesterday. Now, typically with hesitation like that, you're going to have a rollover the next day. It didn't, but we had a shooting star formation today. How is that not bearish? Well, it's tough because if you look at that on the monthly Sly Dog, if we go monthly, it's bearish because it closed down. However, remember, everything is a battle between buyers and sellers. So if we look at the last 1 month of trading for the entire month of August, you had buyers and sellers pushing the price of that index, the S&P 500, up and down, right? Massive fluctuations, which is where you and I thrive off of, are those little micro fluctuations within the month. At some point during that, let's call it 30-day window, you had the sellers in total charge. They were pushing it lower and lower and lower, and it was a big red candle. And again, I'll give you the percentage here just so you can see what the numbers were. At one point, we were down 5.4% for the S&P. But for whatever reason, you can make all the excuses you want, whatever reason, as it rallies back up here, it was only down 1.63%. So if we said who has the last word in this argument, it's the buyers. The buyers pushed this one up. And we can look at this on the daily time frame here. 1 second as I bring it up for you. Right? If this window of activity, I'm going to make a yellow box around, this whole window of activities here, who won? Now, at first thought, and Sly Dog, I'm glad you asked that question. It's like an education moment, and you know I love to educate. So if you look at this picture, whatever's in that yellow box, you're going to say, oh, okay, well, it was definitely down from where it closed out the previous month. However, who had the last word in this argument? Who is the one who had the last word in this argument? And that's the buyers. The buyers pushed this thing back up. It all changed pace on August 18th. Up until August 18th, sellers were in demand. This is extremely bearish. Now, while it's still negative for the month, 1.63%, it came ripping back up near the end, which means right now, momentum is to the upside. Hopefully that makes sense out there, Sly, and for others out there. Even though I do see this as a nice positive move up here on the daily, I am more focusing on this shooting star formation and a retracement coming. So anyway, there's your monthly time frame. Hopefully that made a little bit of sense. Maybe it's a hanging man only if price moves below it. Well, that'd be a tough one to plan out, right? You got a long tail on that bad boy to make that your stop out point. Anytime, Sly. And Sly, I'll throw one out there for you. Set the gear shift for the high gear of your soul. You've got to run like an antelope, out of control. Sly is our resident music expert. Always puts nice music quotes in the chat. There's mine for the day. All right. So that was your S&P 500. All in all, on the monthly, it's a hanging man. On the daily, it's a shooting star, albeit a weak shooting star. But I opened my short position today based off of that, and we'll see how that one pans out over the next about 30 days or so. All right, next on our list, moving up to the top here, we go from the S&P to the NASDAQ 100. Oop, get the gold out of there. There we go. To the NASDAQ 100, which was slightly better, only down 1.48%. I did not short the NASDAQ 100, because the candles look a little bit different. But you have the same basic. Do you have puts on the Qs? No, I don't. I only bought puts on the IWM and SPY. I debated it. I'll show you why here in just a second. So as we look at the Qs on the monthly, you've got that same just ominous looking massive hanging man formation. That's a long bottoming tail there. So in the argument of bullish versus bearishness, Steve Nissen would say this is bearish because it showed weakness during the day. I would argue it's actually pretty strong because it closed right back up at the high for the month, even though it was dramatically down. So that's how I view this one. And notice this, we've had 6 positive months again and 2 negative. And the one negative month in February was almost flat, no change. Oh, sorry. Thank you. Thanks, Lori. Yes, it does. Thank you, Big Ab. Knows it. There you go. Thank you for the chart, Lori. I would not have seen it. I'm over here staring off to my left-hand chart, and I just got in there. No worries, Sly. Most people don't have any clue about fish songs or lyrics. Plus, fish song lyrics are really just bizarre. Don't make much sense. It's all about the live show. So there's your monthly, right? There's your hanging man. I think we'd all agree that the NASDAQ is due for a pullback here, right? It really is due for a pullback. Now, let me switch over to the daily time frame. Now, on the day, you had a gain of 0.3% for the triple Qs. But there you have a similar pattern, although with the Russell and with the SPY, this candle today was a red candle. On the NASDAQ, it's green, and that's one of the primary reasons why I did not go short on the NASDAQ today. Not to say that I won't do it in the future, but right now I wanted to start a position, and therefore, I went 40 IWM, 20 SPY, and I may add to that as time goes on, but we'll see. If it does work in my favor. If not, I'll get stopped out and take a loss on it. So there it is. Anyway, shooting star formation. This is still a shooting star, but I'd rather it be red than be a green one, as you can see here on this daily time frame. All right, you saw just a second ago, and I'll try and make sure I actually have the charts right when I do this one. Gold was your next victim, down 1.28% on the day here, or for the month. And here is GLD, so we can take a peek at what happened with gold. You know, you had that shooting star yesterday on gold, and today you actually got the follow through. And if you trade candlesticks the way that I kind of instruct them, and again, trade them however you like, but my rule is you set a line across the bottom of the shooting star. If it opens up above it and then crosses below, there's your short. So technically, you should already be short gold here as it broke down below that 180.29 mark, and here we are now at 180.02. So, you know, a slight 27-cent winner at this point. We'll see if that continues on here. I do think that there is a good chance that this big gap all the way back to August 22nd could fill at some point. So keep your eyes on that one. All right, that's your daily. From a monthly perspective, let me show you the monthly chart of gold. And this is why I didn't short gold today. So notice you've had this pull back, and then you have a hammer formation. So that's when I have conflicting signs like that, I kind of shy away from them. I'm generally looking for confluence, where on the bigger time frame I see a setup, and then maybe the shorter time frame I get confirmation of it. So for example, on the S&P, you have a hanging man on the monthly and a shooting star on the daily. Okay, I have confluence there. I have two separate things that typically mean bearishness, whereas this one, the monthly showing me actually bullishness on this chart formation, and the daily's bearish. I'll wait for a better sign. Okay. And, you know, this is just kind of my typical monthly wrap-up. I actually like that I get to do this with you because this is pretty much what I do for myself, although I go much faster. That's okay. We can keep it at a measured pace here. The dollar index, 1.75% gain. This might be why we've seen some pain in these equity markets. Here is the dollar index for the month. For the month, nothing special, right? It literally has been sideways for, 8 months now, going all the way back into January. So, yeah, the entire year has been fairly sideways. Now, wait till we switch over to the daily. I think pictures change a little bit. You see that we've had an extremely bullish month of August. We've had 3 days of correction, and today you have a bullish engulfing formation on that dollar index. That's part of the reasons why we saw markets tank today and sell off, was this giant green candle we had today in the dollar index. So all in all, it actually does speak volumes to momentum in the dollar to the upside. Therefore, I feel like this is probably going to continue the upside next week, meaning more bearishness for the equity markets. And remember, Monday's closed, so you'll have low liquidity. Where are you at on your book? Oh, God, Pepe, keep bugging me. It was funny. I actually, this is last week, I got to writing. I sat down at 2.5 hours. I really got into it. I wrote this whole introduction piece, about 2.5, maybe 3 pages of just great content. I loved it. It really just kind of echoed my view on the principles of money, why it's important that you plan, and just some lessons that I learned in my past that I think are easy to convey to you guys and you know, grasp what this whole book is about. So it really was my whole introduction. And I had like 3 different Word documents open, and I went to close one thinking it was my outline and said, do you want to save it? I'm like, I didn't modify my outline. Don't save it. I lost all of it. Every piece of it is gone. So I have to rewrite it all. So I'm struggling at my book. I talked to a friend of mine who is an editor, and my goal is still to have it to him by October 26th. It'll be a tough deadline for me to meet, but my goal is to have it to him by October 26th, and then we'll edit that out and hopefully get something out. I need to get it done. I know. You know, it's tough when you're doing these things because writing a book, for anybody who has written one, it is a lot of work, and I constantly go back and revise my process and keep changing. It's like I just need to get it done, let my editor rewrite pieces for me if they're incorrect, but I'm a bit of a perfectionist at heart, so it's just like I feel like I'm stuck in the mud spinning my wheels on this one. Lisa says, Merlin question, do you hold long puts over a holiday week and not worry about theta decay, eating of the profits? No. I don't because I'm out 90 days. So I've got till November 17th is when I bought the expirations for, so I'm not really that concerned about it. I wanted to get some today. I think that next week, due to being lower liquidity, lower volume, you're going to have more volatility. And if the follow-through is what I think it is, next week could be a decent down week. But again, I could be totally wrong. I know, John. Autosave. I know. Oh, Les, October 26th of what year? Thanks, pal. Really rubbing the dirt on that one, aren't you? Pepe says, when do you bring your travel credit card friend, Merlin? You said back in December you would want to bring him on the show. I wanted to. He's been traveling. And He has not been very responsive to it. I will continue to. He's actually in Thailand. It would be kind of funny if I went to Thailand in November, if I got to interview him from the villa he's staying at. That would be kind of fun, but probably not going to do any shows from Jamaica either, so don't get all excited. All right, keep moving up the ladder. We're almost at the top, guys. We have 2 more markets to go. Next on our list is oil. 2.11% gain for crude oil. This is something that I'm going to include in the Monday morning must-knows for everybody for Online Trading Academy, but keep your eye on oil. Primary reason is you have OPEC saying that they're going to stick to their cuts, right? They're going to continue to reduce. However, Iranian oil is exceeding, for some reason, they're not impacted by the cuts that OPEC has said they're going to make. So Iran's part of OPEC, and they're like producing like crazy. Now, granted, they're not the highest volume producer of oil, but it is, showing an increase in barrel production. You also have OPEC Plus, which brings Russia into the equation, and they certainly want to start doing more and more cuts to choke out the West, I guess. And that could create some big up moves for the price of crude oil in coming months. Right now, you're seeing that. I think it's reflected by people's pessimism about what's going to be going on with oil and OPEC Plus. And there you go. You've got the last 6 days or so have just been nuclear, really, for crude oil, going from $78 to about $83.63 close today, coming right back into those highs we achieved back on August 10th. So on a daily perspective, 2.45% gain for crude oil. On the monthly, though, take a peek at the monthly. Very small indecision spinning top for the month. All right, now typically those are reversal patterns, but we'll have to wait and see. I am more bullish than I am bearish on crude oil. And finally, the victor, the big daddy, the kingpin of the month, the 10-year bond. Dun, 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 dun. We talked about this. Oh boy, 3.56% gain in the yields there on the 10-year. So here is your chart of it. There's the 10-year. It's down 0.1% today. On the monthly, right, this is the new month, so let's not take that one into consideration. On the monthly, it's this green candle right here, and it actually is a monstrous, what looks like a shooting star. Very similar to what we see with the NASDAQ 100 right now. Obviously, I would like this to be red if it's in fact going to be a reversal formation and heading back down, but all in all, we did hit, oh, by the way, I didn't mention this. We tapped in, we talked about hitting that 4.335 mark several months ago. We hit that one on a monthly back in October, and that's kind of why I identified this as the double top. If you notice here on the daily, we hit that one a few days ago, 4.335. So there's your double top put in. I didn't know why I'd bring this one up last week, which I should have. But that was your area of supply where you logically expect this thing to sell off from. We had that one mapped out for months. And now the question is, do we come back down to this 4% mark, which I think is fairly logical? Although there's a lot of moving parts going on right now. I think with the government uncertainty, all this political stuff going on, you've got elections, elections posturing. And then both sides saying we're going to have a soft landing, others saying we're going to have a crash landing, some people saying markets are going to be totally fine. Who knows what the heck is going to go on with our markets overall. So right now I am bearish on these markets, slightly, not aggressively, but I'm slightly bearish, just thinking there needs to be a pullback for our markets. We'll see if that's how it pans out. And these are, again, our results for the month of August. Merlin, what are your thoughts on real estate like XHB? I can't help but to be bearish on real estate given what's going on with the yields. Now, everybody will have a different perspective. Heaven forbid you talk to a realtor. Don't talk to a realtor about what they think is going to happen with the housing market. They're the wrong people to talk to. It's kind of like a gold dealer. Somebody who sells gold is never going to be bearish on gold. Oh, buy gold. Just buy it, right? So don't talk to a realtor. Most realtors are going to be permanently optimistic about the housing market. In theory, if you look at economics and kind of the way this whole process typically goes, the higher those yields go, the more likely you're going to price people out of the market. And that means less buyers. And if you have less buyers, that means less demand. And if there are homes on the market, they'll have to lower their price to get down to affordable levels for those home buyers. That said, the argument is that there's not a lot of supply out there. So one of the theories that I read recently and talked about with a buddy of mine was that you should buy a house right now, even if rates are 7, maybe even 8%. It's like, why is that? Well, because if you buy now, and then rates do drop, you can always refinance. But then you're going to have those people that now meet the criteria to be able to buy those homes, and they're going to jump on it and drive prices up even more. So, I don't know. Depends which way you look at it. Overall, I think that there's going to be a housing correction. I think you're going to see because of some of the crackdowns by Airbnb and VRBOs. Different city governments are saying, nope, you can't do that type of stuff. I think people who are trying to make money off of renting out their homes for short-term rentals may feel the pinch here and ultimately put their house on the market because they're just not making the money that would pay their mortgages like before. You hear these stories on, every now and again I'll see an article from CNBC or Fortune or something about some 30-year-old kid who owns 17 homes and each one pays his mortgage 5 times over for the month because he Airbnbs them. Okay, well, that's cool, but as soon as everybody starts to do that, you create a little bit of a problem. You start creating competition in the rental market for areas, and then you're going to have to lower your prices. Of course, now people are being forced to go back to work. I think it was, who was the, there was one CEO, I think it, what was that CEO for? I think it's Amazon CEO, because it's not Jeff Bezos anymore, right? I think it was Amazon CEO's like, you guys better come back to work. If you're not coming back to the office, it's not going to turn out well for you. Like basically like come back in or we're going to fire you. And I think you're going to see more of that. That's also going to pull people in from properties they may have bought out of state, vacation properties. And I think that'll create a little bit of a problem. Not a major one, but I think it'll certainly slow down. Yeah, Margaret, with zero money down. Exactly. Oh, crazy. Let me see. So on home builders, GS3, I'm a little wary on them. Let's real quickly take a look at home builders. It was not designed to be the topic du jour, but hey, let's do it. Let's go to KBH. There's KB Homes, right? On a daily, it looks fantastic. And they were definitely the beneficiaries of very low rates, right? They were building homes. All of a sudden, commodity prices started to drop. Their profit margins were great. And that's fine. We like to see the profit margins there for KB Home or Toll Brothers. Here's Toll. Right, similar picture. Here's Lennar. They've all been on an absolute tear. Lennar a little bit weaker, but I have a friend who just bought a brand new home, loves it. Great. I think Pepe, you just got one, right? Were you with Lennar? Total, you're with one of these guys. I just think that the profits are going to start to slow down a little bit there. I think the housing market. I'm not calling for a housing market crash. I'm not saying we're going to collapse like we did in 2008. I think that was a one-off. But do I see a 20% correction coming in the housing market? Yeah, I think that would be logical, especially considering what's happened with housing prices. And as we look out to the Case-Shiller Composite 20 Home Price Index, which I will bring up for you here in a second. Give me a minute to bring it up. Where's TJ? TJ, when you look at that Case-Shiller Composite 20 Home Price Index, it's pretty clear that prices are slowing down more and more and more. So let me see where was that Case-Shiller? That was last week, I believe that number came. Oh, here it is right here. Right, you can see right there is evident that the value is now contracting. We're no longer seeing price appreciation. Even when it was, over here in November of last year or December, it still was increasing year over year at 9%, which is, I think, much higher than normal. I believe the historical average year over year gain for the housing market is between 5 and 8%. That's what I remember reading from realtor documents in the past. Well, right now you're at a contraction, meaning prices are declining. If that continues, that's going to put a pinch on housing market. So I think trends are your friend until the bend at the end. And if we zoom way out here and even incorporate in that 2008 drop plus that 2011 decline, there were periods where we were down below zero, and it doesn't mean the end of the world. It just means that things are slowing down. And the more that prices decline, I think you'll have more people say, I'm out. I'm going to get my money while I can. And then you have people like me who have diamond hands and just keep holding. I'm looking for a drop. Big M says, I'm looking for a drop in prices so I can get a mountain retreat to get away from the nice weather in San Diego. Yeah, I was looking at Big Bear. I put an offer on a place in Big Bear. I think I told you about that one. It was like they wanted $290, and I offered them $320, and they're like, oh, if you pay $370 all cash, you can have it. It's like, come on, man. That house currently is going for $425, but yeah, I think you're going to start seeing slow down. I actually use Redfin, and I get a lot of alerts for Big Bear area, which is where I'm looking at. And I see a lot of people cutting their prices right now in Big Bear. All right, let me see what else I got here. A couple of the questions I want to make sure I get to. Reaches are good for providing price lists, sales, escrow lists. Yeah, look, I'm not saying anything against realtors. Realtors are great. You get a good realtor, man, they can help you out tremendously, especially when it comes to figuring out little things you can do with that property, where you might be able to save. My father's an agent, and he's great. If you're ever buying in Sonoma County, I would highly encourage it. He's a very, very good realtor. I've been doing it his whole life, so you would imagine they're going to be really good. However, when it comes to forecasting, typically realtors are going to be continually bullish because their job is to sell homes. So why Big Bear? It's 2 hours away from here. I love to snowboard, so I might get a season pass and just spend time up there, get away from here for a while. It's kind of rat race and hustle and bustle, and maybe just stay. But that's going to have to wait for right now until we get a really big decline in housing prices up there. They got pretty elevated. All right, let me see. I had some questions that came through here. So this is a long-winded question. Tom, you sent in a couple ones. Some good questions, by the way. Comments and questions. He says, you wouldn't be shocked if I said that I believe that there are often a difference between a ticker symbol's value and the real value of a company. Not only would I not be shocked, but you should always think that. You should always think that the true valuation of a company is going to be very different. It might be higher or lower than the actual value of its ticker versus the true valuation. So this is where somebody like Larry is scouring through fundamentals and looking at a bunch of different formula equations to say it's a value play. To summarize here real quickly, Tom was saying I'm looking at discounted cash flow, which is one metric to look at, right? And at that point, your feeling is that the Tesla is overvalued. And when I said, I want to make sure, I don't think I said that I think Tesla is undervalued. It's based off all the analysts that I've looked at. And of course, analysts are biased. But I went through, and most analysts are feeling that it's undervalued simply because of the different factors that are facing it right now, such as the rollout of the Cybertruck, such as batteries and new energy technologies that Tesla is at the forefront of, right? You look at battery day, some of the things they're trying to do with their batteries would set them exponentially apart from anybody else, right? It's a technology to be proprietary to them, and I think that gives them a competitive advantage going forward, therefore deservingly having a higher PE ratio. So I also look at the AI aspects to it, where at a certain point, Tesla could be licensing out its AI technology to companies like Ford or GM, which GM, some of them have their own AI, but maybe you become the kingpin that's licensing out your technology. You have a different type of business model. You're no longer just a car company, you're AI as well. And that's why I think that, and Tom and I disagree on this, and that's fine. We can all have different perspectives on it. But I don't think that Tesla is exclusively a car company like a Ford or Chrysler, GM, etc. I think it's a little bit different. Exactly, Talking Monkey. Get that fire sale going. Anyway, so I wasn't referencing anything fundamentally because I'm not a fundamental analyst. I gave up on that years ago. It did not work for me. Even though I have a finance degree, I don't care about fundamentals. I will look at them and see if something's way out of whack. When it comes to fundamentals, I will look at Larry and be like, hey, check this out, Larry. What do you think? So typically when I'm thinking overvalued, undervalued, it's based off the summary of analysts out there and expectations. And then I look at the share price, right? For me, my trading and investment decisions is typically off of the share price. Where is it relative to where it was? Are we in a strong demand zone? Do I like the price at these levels? Then fine, I'll go for it. Can you patent AI? I think you can patent the technology that you are using to create AI, right? It's simply data sets. So they would probably, I imagine what Tesla would do here is create a proprietary data mechanism that you have to use their system to interact with that data. All right, so that's the first one from Tom. The second one is this one. And this is an interesting one. I didn't bring up the slides here, but Tom was saying, I created a filter a while back to look at companies that were soaring because of the lockdown. And we had, obviously Zoom was doing great, Netflix was doing great, any streaming company was doing great because we all just sat home and watched TV like crazy. What a waste of time that was. He said, anyway, I ran the filter today and saw 4 companies that met my filters and 3 were solar battery backup power. Their bear run may be over, but I found it quite interesting that solar had tanked. Maybe then gotten whipped by the EV hype, and that has cooled it a bit. So I'm not sure as all the factors, Tom, as to why it was that they took such a big hit. One thing that I do know, and this may not be across the nation, but I know in California, there was a ton of incentives for homeowners to put solar on their roofs, like significant incentives. And there was a period, I know that my friend Dave over in Tustin was getting one done, and he was scrambling, like rushing to get his permit and application to put solar in by a specific date, because as soon as it went past that date, the city was giving no subsidy, no tax benefit, nothing. And he said that once he did that, there was like a 6-month wait just to have solar put on. So you put your order in, you get in the system, but you got to wait 6-9 months to get the solar actually put on your building. I think that might be what drove those solar companies up, was this massive influx of demand because people were trying to get solar on their house by a specific deadline. And now it's up to these solar companies to fulfill those obligations. So do you think the demand is going to be there now? Probably not, because all the initial surge because of the incentives is gone. You know, and it's interesting when you look at different models like that, where you create an incentive for people to buy now. Typically, you run out of inventory and they say, oh, sale's over. Sorry, there's no more left, right? Black Friday is a perfect example. You get everyone to come into your store because you got 70-inch TVs that you say are $199. And of course, these people line up and sleep there for a week to run in and be the first one to grab the 5 TVs that are $199. Well, with solar, I think they just kept on booking and booking and booking and booking and booking and booking and booking as far out as they could go, even though that deadline ended, let's say, March 1st. So I think that's part of the reason why is the realization is that these solar companies are not going to get the great sales that they were getting because those deadlines have passed. I think that's part of it. I don't know all the facts there, Tom, but that's definitely something that I've seen here. And I knew a couple people who were, my father as well, was like rushing to find somebody to put his solar on his roof in a very timely manner. And if incentives would make sense, but I would have thought that was baked in the stock price already. Yeah, you would think so. We put solar up 10 years ago. It's great. 10 years. Did you get any incentive back then? Man. All right, where are we at time-wise? Oof. All right, I got a couple questions I still need to get to, but I'm going to have to get to those ones tomorrow. Let's go look at, where was my economic calendar? I want to talk about the stuff that happened today. There was obviously some news that came out today that was noteworthy. We talked about this core PCE price index, right? Expectations were going to come out at 0.2%. Lo and behold, they actually hit their expectation. Impressive. So here's where we stand with the most important metric for the Federal Reserve, which is 0.2%. It's core PCE price index. So all in all, good news. We're not increasing, we're not decreasing. There's a lot of people that are assuming that inflation would start to rise yet again. We haven't seen that with the core PCE price index. Of course, that all means, do you trust the numbers that are coming out by whoever's reporting this? So it's good news for our markets today. With that, what did we get? I want to go look at the Fed funds futures here, because in a couple of weeks, or 3 weeks, we're going to have an announcement by the FOMC meeting. And as you can see, we're at 89% right now that we're not going to have a rate increase. That's decreased 1%. Since yesterday, it just increased 1% that we get a 25 basis point increase. But right now, we're about 89% to 11%, meaning a 25 basis point increase happening at the September 20th meeting. So no big changes there. I think you may see that change a little bit more as time goes on. But when we have that core PCE number come in, as good as it did at 0.2%, I think that's a very positive sign for our market that the Fed will most likely hold at the next meeting and continue to hold until there is any pop-up, right? I think if we came to 0.3% today on our core PCE price index, we would have seen this number shift. Everything is so expensive nowadays. It's mind-boggling. So there's a pizza guy. So one of the bars I like around here, I used to go there for trivia on Thursdays. They have it's a brewery, and they have food trucks that come by out front. $21 for a personal pizza. Now, it's nice. It's all handmade. It was delicious. But $21 for a handmade pizza? Like, I'm about to go get some Tostitos bagel bites and call it a night. Man, crazy. Richard said core PCE actually ticked up from last time, and before then it ticked up too. Not according to the data that we got here. So if you look at the numbers that were given out, it's actually been drifting down. We know we're stuck at 0.2% for the past 2 months. I'll zoom in here. I don't think that it has ticked up. Expectations were right where it came out right where they expected it to be, right? So there's your core PCE. If you're talking about PCE, when you take out the core, that might be different, but their core PCE numbers didn't tick up at all. It was actually right in line with expectations. What else do we have out there for today? Flour with salsa. Yeah, I know, but it's the little pizza ovens. It's the deliciousness of homemade pizza. It was so good. All right, let me see what we got cooking for tomorrow for you guys so I can wrap this one up. Let's go to calendar. I'll show you. There's really not much happening for your Friday session. September 1st, you got average hourly earnings, Non-farm employment change. Now we had some employment data come out today, as you can see right here. You had the unemployment claims came out lower than expected. That's great. The lower that gets, the better. People have asked me before, like, what's the normal number? Well, let's zoom out here on our unemployment claims and go all the way back as far as I can go on this site here. I'm going to go pre-pandemic. Notice pre-pandemic, you were 228. There's the pandemic number really screwed everything up, obviously. But you go back in here, like 200 seemed to be about normal. You get to 225, you don't really see much above 300. So this, all in all, staying right around 200 would be a good unemployment claims number. And here we are on the hard red edge at 228. So we're slightly higher than historical norms, but we're pretty darn low, which is a good sign, especially for the economy. And we know there's tons of jobs out there. So anyway, for tomorrow, you've got average hourly earnings, non-farm employment change, which will be a big one. We saw the ADP non-farm employment change come out much lower than expected as well earlier this week. You also have the unemployment rate. Right now, it's expected to stay at 3.5%. Remember, Jerome Powell has said, expect pain with regards to unemployment. We're going to feel some pain. I'm looking at this chart, and I don't see much pain here. Right, staying down below 3.7% for the better part of an entire year, I would say, is really good. So I don't see the pain yet, but maybe he knows more than I do. I'm sure he does, knows way more than I do with regards to this data. And maybe we see this slightly tick up, but 3.5% right now is the expectation for tomorrow's announcement. That will come 1 hour before the equity markets open. Now, as the markets open, 30 minutes into the trading day, you have ISM manufacturing PMI, you have services price or manufacturing prices as well as construction spending. So kind of a busy day. The unemployment rate will probably be the most important one there. If you're trading the Canadian dollar, they're expecting their GDP numbers to come out, and that is expected to be rather ugly, going from 0.3% gain to negative 0.2. All right, let me see the last couple of comments in chat here, and I'm going to wrap things up for today. Here's a question for you. Which president said the greatest power isn't in the White House, it's in the media? I think that might be a Barack Obama or Donald Trump quote. Knowing Donald Trump, I would probably think it's Donald Trump. Who is it? Who is that one, Richard? It's a good one. Let's see. Pepe said, I can't imagine people who retired before 2020, their checks got eaten with inflation, and so those elderly just getting paid Social Security. So their checks got eaten with inflation, but they also, if they had investments at that time, they were rewarded by this robust bull market. Who I feel worried for is not the ones who got hit by inflation. Let's be honest. Inflation got high, but it wasn't like jaw-dropping, break your bank account like it was back in the 80s. What would be worse would be having your account drop 50% on a market correction with all your investment portfolios. Forget Social Security. I'm talking your investment portfolio, because in theory, your investment portfolio should be more than your, Richard Nixon, huh? Yeah, and think about when he made that statement. I mean, the media influence was nowhere near what it is today. It's incredible how much you can be swayed. I was telling a friend of mine who is ultra conservative and believes some things I just have to shake my head at and go, there's proof that that's not true. And he's like, no, it's true. As an experiment, just so you guys know, I went out and I created an Instagram account and a Twitter account under a false name. I'm not going to tell you what the name is. But I basically tried to see if it would radicalize me in my viewpoints, and it certainly would have attempted to do so. I started clicking on things that were very one-sided politically and extreme on that side. Conspiracy theorists, bullshit, all that stuff. And next thing you know, every single thing that I'm getting is conspiracy theory. It's like, don't trust this person. They're a threat. You need to join this community group and activists and, make a stand. And some stuff promoting violence. Like, man, this is crazy. That movie I think was called The Social Network. Was it Social Network? There was one movie that came out which talked about, the algorithms by Meta and Facebook. And it's just really just unbelievable how quickly and easily their algorithms, not trying to be malicious, are feeding me stuff that will be clickbait, sensational headlines about how the election is rigged, sensational headlines about, cops doing crazy things that may not have done, but it's going to keep feeding me this stuff, and it radicalizes you. It's really unfortunate. But, we talked about it yesterday with the AI discussion. And it's like World War III will be fought over AI, probably because some fake headline, some BS is going to force people or convince people to do something radical. I hope it doesn't happen, but it just feels like that's the way. Social Security adjustment doesn't catch up with the grocery index. True. Yep. All right, we are at 45 minutes. I'm going to wrap it up. I do have other questions I wanted to get to, but I know I could keep on going and going. So I'll cut this one at 45 minutes. Tomorrow is a whiskey show. We will be doing a Friday show full show. If you guys have something you want me to talk about, do me a favor, send them on in. I appreciate all the comments, questions, the feedback. I know I see some new names here today. If you are new, hit that subscribe button. I do this show typically every day, Monday through Friday, although over the next couple months, I'm going to be missing some time because of vacation, because of work, and I'm also going to be teaching some classes for Online Trading Academy, which are going to take away from the show for a little bit. But looking forward to get back into the classroom and teach both physical classroom and online. The physical one I'm really looking forward to because I haven't done that for a long time. So I will see you all tomorrow. Again, if you have questions, send them into TraderMerlin@gmail.com or put them down below. Any video on my YouTube channel. I haven't talked to Don. I'll text him right now. But yeah, if he wants me on Friday's show, I'll gladly do Friday's show with Don Front. I will see you guys tomorrow. Have a great day.